Zero. That is the jaw-dropping number we need to talk about. Back in 2021, there was this massive revelation from ProPublica showing that some of the absolute richest Americans paid literally zero federal income tax. We're talking about billionaires here, guys like Jeff Bezos and Elon Musk. Zero. Not a single dollar went to the federal government in income tax. Now, I know your very first instinct might be to think, well, they cheated, or they definitely broke the law. But actually, they didn't. They achieved this zero tax reality because they understand something that your employer, your school, and the whole system never bothered to teach you. Nobody teaches you this. They aren't cheating. They are simply playing an entirely different game.
And that game, it's buried right in here. 70,000. That's exactly how many pages make up the United States tax code. Over 70,000 pages. And, spoiler alert, it was not written to make your April 15th any easier. Every single one of those pages, every obscure deduction, every credit, every little loophole, it was written intentionally by lobbyists and lawyers working specifically for the wealthy. It was put there for the people who know exactly where to look. So if you've ever felt like the system is rigged, well, it isn't broken. It's actually functioning exactly as it was designed to.
See, we are all taught a very basic, very simple rulebook. You earn money, and you immediately pay tax on it. End of story, right? But the ultra-wealthy follow a completely different flow. Yes, they earn money, but right before the tax man comes knocking, they deploy it through highly specific, entirely legal structures that completely wipe out the tax. It's literally two completely different rulebooks operating in the exact same economy. I really want you to listen to this and just let it sink in for a second. The tax code is not designed to take money from the rich. It is designed to take money from people who do not know the rules. The strategies we're about to unpack today, they aren't hidden away in some secret billionaire vault. They aren't illegal shadow economy tactics either. They're sitting right there in plain sight, baked into that 70,000-page document. So today, we're pulling them out for you. We are going to level the playing field once and for all. All right, let's get right into strategy number 1. Live on borrowed money. This is the billionaire blueprint. I need you to pay super close attention to this because it's going to change how you see money forever. Ready? Loans are not income. Think about it. When you earn a salary, you pay income tax immediately. Every dollar gets taxed before it even hits your checking account. But when you borrow money, you pay absolutely zero tax. The IRS simply does not tax debt. So what do the billionaires do? Well, they definitely don't take a massive, highly taxable salary, and they certainly don't sell off their stock because that would trigger huge capital gains taxes. Instead, someone like Elon Musk will just borrow billions of dollars against his Tesla stock. Jeff Bezos borrows against his Amazon shares. They use that tax-free borrowed money to buy the mega mansions, the yachts, and to fund their entire over-the-top lifestyle. And because technically it's a loan, the tax bill is literally zero. Now, sure, you might not have billions in stock sitting around, but this exact same principle applies to home equity loans, margin loans against a smaller investment portfolio, or even business credit lines. The takeaway here is huge. Borrowed money is tax-free money. Okay, moving on to strategy 2, the Roth IRA, better known as the zero tax machine. Now, if that first strategy felt like it was totally out of reach and only for the billionaires, this next one is literally for anyone. Look at this staggering number, $1.5 million. Here is how the Roth IRA acts as the absolute most powerful tax elimination tool for everyday ordinary folks. Yes, it's true, you put money into it after you've already paid your income tax, but here is where the magic happens. Everything that grows inside that account from that day forward is completely tax-free. Every single dividend, every capital gain, every dollar of compounding profit, forever. Let's just do the math real quick. If you invest just $6,500 a year into a Roth IRA starting at age 25, by the time you hit 65, you could have over $1.5 million just sitting there. And when you actually retire and withdraw that money to live your life, not a single cent goes to the IRS. Zero tax on $1.5 million. Guys, this isn't some shady loophole. It is the actual law, written specifically to reward you for investing your money early. Strategy 3, deduct everything. This is all about the undeniable power of business ownership. If you truly want to make the tax code start working for you instead of against you, this right here is where the real everyday money is saved. Just look at the sheer volume of normal everyday expenses that suddenly transform into tax advantages. If you own a business, and yes, even a small, legitimate side hustle absolutely counts, the tax code instantly becomes your best friend. Look at the business owner's playbook. You work from home, Boom, a percentage of your rent or mortgage becomes deductible. You use your car for client meetings, mileage, insurance, and even depreciation are deductible. Your cell phone and your internet bills? Deductible. Booking flights and hotels for business travel? Deductible. The laptop you're literally using right now, the courses you buy to level up your skills, heck, even 100% of your health insurance premiums if you're self-employed. It all gets legally deducted from your taxable income.
Let's put this into perspective and compare two people making the exact same amount of money. An employee earning $80,000, well, they get taxed on the full $80,000. But a business owner who earns that exact same $80,000, after running all those totally legitimate lifestyle deductions we just talked about, the home office, the phone, the car, they might only actually pay tax on $40,000. They're bringing in the exact same amount of cash, but they're paying half the tax. That is the sheer, undeniable power of having a business structure in place.
All right, strategy 4. Buy, borrow, die. The ultimate generational wealth loophole. This is it. This is the ultimate endgame tactic used by massive dynasties, like the heirs to Walmart, to keep billions totally tax-free across multiple generations. And the execution is just brutally simple. It's 3 legal steps. Step 1, buy. You buy assets that appreciate over time. Think real estate, stocks, businesses. Step 2, borrow. Remember what we learned earlier? Loans aren't taxable, so you just borrow against those growing assets to fund your life. You never actually sell the assets, which means you never ever trigger a taxable event. And finally, step 3, die. I know it sounds incredibly dark, but just wait until you see the absolute legal magic that happens at this final stage.
So, when you eventually pass away and leave those massive, highly appreciated assets to your heirs, the tax code triggers a special provision. It's called the stepped-up basis. And guys, this is the holy grail. Let's say you bought a property for $100,000, and over your lifetime it blew up and grew to be worth $10 million. If you sold it while you were alive, you'd owe massive, punishing taxes on that $9.9 million of profit. But when you die, all of those accumulated gains are legally wiped completely clean. Your heirs inherit that property at its current market value of $10 million, meaning if they turn around and sell it the very next day for $10 million, they owe exactly $0 in capital gains tax. Buy, borrow, die. It's wild, it's completely legal, and it's written right there into the rules.
Okay, so here is your zero tax action plan. It is time to start playing by their rules today. Look, having all this knowledge without actually executing on it is pretty much useless. So here are the 4 urgent, highly actionable steps you need to take starting this exact week. Number 1, open a Roth IRA today. Seriously, go to Fidelity, Schwab, Vanguard. It takes maybe 15 minutes. Max it out every single year and just let that money compound tax-free forever. Number 2, start a legitimate side business, whether it's freelancing, consulting, or selling stuff online. You have to give yourself the legal right to claim the deductions that regular W-2 employees are totally locked out of. Number 3, hire a real tax professional. Stop using basic out-of-the-box software or the cheapest preparer you can find. Get a CPA or a specialized tax strategist who actually understands business owners. A good advisor will literally save you 10 to 20 times their own fee every single year. And number 4, start accumulating assets. Buy real estate, buy index funds, literally whatever you can afford. Build a solid base of assets that you can eventually borrow against instead of constantly selling them and triggering those massive tax hits. At the end of the day, the tax code was not written for employees. It just wasn't. It was written for business owners, for investors, and for asset holders. The ultra-wealthy aren't out there cheating. They are just playing a highly specific game. And now? Well, now you know exactly what the rules to that game are. So I'm going to leave you with this final, absolutely crucial question to think about. Are you going to keep playing by the old rules and just watch a massive chunk of your life's work get taxed away? Or are you going to finally take control, restructure your finances, and start playing the game exactly the way the wealthy do? The choice and the money is entirely yours.